Assalamualaikum and greetings to everyone. Welcome to our presentation on. This presentation is brought to you by our dedicated team.
I'll be giving an overview of Retakaful rules in Takafuls, its challenge and the path forward. Retakaful plays a vital role in risk management and financial security, ensuring that Takaful operators can meet their obligation while adhering to Islamic principles by eliminating riba, wara, and maisir. However, the industry faced significant challenges, including insufficient Retakaful capacity, while leading operators to rely on conventional reinsurance options, which raising concern about Shariah compliance. Additionally, the limited numbers of Retakaful providers result in concentrated risk, causing financial instability. For the long-term growth of Retakaful, it's essential to expand the number of Retakaful providers, develop global Shariah standards, and strengthens the industry's resilience to ensure both financial stability and strict adherence to Islamic principles. Now we will discuss the essential principles of Takaful and Retakaful. Takaful operates as an ethical alternative to conventional insurance, polluting resource amongst policyholders to provide financial protections. Unlike traditional insurance, it eliminates riba, wara, and maisir, alliance with Islamic principle of fairness. Retakaful, the reinsurance counterparts in the Islamic finance sector, ensuring that risks are shared and claims are managed effectively. It maintains financial stability and ensures the long-term sustainability of Takaful by distributing risk across a wide pool of resources. While Retakaful plays a vital role, several challenges hinder its growth. Many Takaful operators rely on conventional reinsurance providers due to underdeveloped of Retakaful market, which raises concern about Shariah compliance. Additionally, there is a lack of consistent regulatory framework across different jurisdictions and a shortage of skilled professionals in risk management and conceptual science. In Malaysia, over 60% of Takaful operators face capacity shortage, further demonstrating the needs for improvement. However, steps are being taken by regulatory bodies such as Bank Negara Malaysia to address this challenge by strengthening governance and encouraging the development of new Retakaful providers to ensure the growth and sustainability of Retakaful globally. It's essentially to build up the Retakaful sector, ensuring both financial soundness and adherence to Shariah principles.
The key challenges faced by Retakaful industry, these issues impact growth, sustainability, and compliance, which requires strategic solutions for long-term development. First off, limited market size and competition constraint. The Retakaful industry remains relatively small with limited players and high competition. This restricts growth opportunity and reduce market efficiency compared to conventional reinsurance. Second, capital limitation and investment constraint. Many Retakaful operators face capital shortages and restricted investment revenue due to Shariah-compliant investment requirements. These affect financial stability and limit expansion effect. Thirdly, regulatory and compliance complexity. Strict Shariah and regulatory framework adds complexity to Retakaful operation. Compliance requirements, as we know, can be costly and time-consuming, which create barrier to market entry and innovation. Fourth, leakage to Retakaful business to conventional reinsurance. Due to the lack of sufficient Retakaful capacity, many Takaful operators rely on conventional reinsurance, which lead to Shariah non-compliant risk and a weakening of Retakaful industry foundation. 5. Limited product innovation and development. The industry now struggles with a lack of new product offering, which limit its ability to compete with conventional reinsurance. Innovation is now most needed to meet diverse market demand. Next, talent shortages in Retakaful operation. There is a shortage of skilled professionals with expertise in both Takaful and reinsurance. This talent gap affect operational efficiency and the ability to develop specialized products in Retakaful. 7. Low awareness and market penetration. Many businesses and consumers remain unaware of Retakaful solution. The industry needs stronger marketing, education, and engagement effort to improve adoption. Therefore, these challenges highlight the needs for strategic reform, capacity building, and market awareness to strengthen the Retakaful industry. Addressing this issue will be the key to ensuring its sustainability and long-term growth.
The first objective of our study is to assess the current state of Retakaful, to understand and identify challenges such as decreased capacity, regulatory gaps, and shortage of expert personnel. Understanding this limitation will shed light on the underdevelopment of the Retakaful sector and in respect of broader Islamic insurance market. Secondly, we will look on how this capacity shortage affect risk management in Takaful operation. In order to explore the consequence of insufficient Retakaful capacity on financial security, underwriting effectiveness, and Shariah compliance, it included excessive use of conventional insurance and the result financial instability which endanger the long-term sustainability of Muslim insurance system. Finally, the study will identify the essential role of Retakaful in managing risk for Takaful operators. It is to investigate advanced Retakaful practice and examine effective models that enhance risk management. It is to provide a comprehensive framework for strengthening Retakaful in the market with recommendation for capacity building, regulatory enhance, and Shariah compliance risk sharing technique. It is not only to address this critical challenge that also help shape strategies that will ensure a long-term growth and stability of Retakaful and broader Islamic financial sectors.
Hi everybody, so let's continue with the literature review, explore the key aspect of Retakaful in Malaysia. First, we have research paper by Nurwajiha Engineer Ali and Rizal Markum who discuss Shariah compliance on Retakaful in Malaysia. So their research highlight the principles and framework for ensuring that Retakaful operations align with the Islamic law. So next, Sharifah Nur Amalina Said Nasruddin study cabaran dan peluang Retakaful di Malaysia, explore the challenges and opportunity faced by Retakaful sector in Malaysia. So next, we have one Zamri, one Ismail, research title Retakaful, an integrated mechanism to enhance prudence, cost effectiveness, and efficient, provides a deep dive into how Retakaful can enhance operational efficiency and manage risk effectively in a cost efficient. So lastly, we have, can a Takaful company reinsured with a reinsurance company by Asma Abdurrahman. So this paper discuss controversial topic of whether Takaful companies can enter into contract with conventional reinsurance company, touching upon the Shariah implications of such practice. Now, I would like to explain about the contents of the research we have studied. First, about comparison between Retakaful, Takaful companies, and reinsurance companies. So Retakaful is not active as takaful companies. It is relatively new sector and quite small compared to the well-established reinsurance company. Retakaful relatively small scale impact the ability to manage risk in Shariah compliance, especially when compared to the largest insurance company. So rely on the reinsurance, is it permissible or prohibited? So there is an ongoing debate about the permissibility of Retakaful company relying on conventional reinsurance. Some scholars argue that it is permissible under the principles of darurah, necessity, and hajah, needs, meaning that when there is no alternative, it is acceptable. On the other hand, some scholars object to the such practice due to the core prohibitions in the conventional insurance, such as riba, usury, uncertainty, horror, and gambling for maisir. So contemporary views suggest that reliance on reinsurance can only be allowed absolutely necessary, and even then, should be limited to the portions of risk that Retakaful is unable to cover. So next, let's move to explore some critical factors that affect the Retakaful industry. The main factor for Retakaful is capacity. So one of the key challenges faced by Retakaful company is insufficient funds and limited available resources, such as underwriting expertise, claims handling capabilities, and technological infrastructure. It is crucial to properly address all risks that needs coverage through appropriate treaties, ensuring that the risk stated is well documented. So additionally, a facultative Retakaful must be confirmed before acceptance, and annual review are essential to ensure that Retakaful needs are sufficiently covered. So next, Retakaful schedules under regulatory governance in Malaysia. The Retakaful industry in Malaysia is heavily influenced by IFSA, Islamic Financial Services Act 2013, Accounting and Auditing Organization for Islamic Financial Institutions, and the Shariah Advisory Council. So one key identifier is the lack of standardizations within the Retakaful system. So to address this, there is a need to streamline regulatory process within the Retakaful framework by creating clear guidelines for operational models, policy, accounting standard, and risk assessment methodologies. So to conclude our literature review and analysis of the challenges and consideration in the takaful sector in Malaysia.
For data collection method, we use two main sources of data, which is primary and secondary. For primary data, we conducted semi-structured interview with industry experts, which include academician, takaful agent, business owner, and analyst. These interviews were conducted face-to-face or virtually and lasted between 45 to 60 minutes to allow for in-depth discussion with each panel. For secondary data, in order to strengthen our finding, we analyzed various industry reports, for example, Deloitte, EY, Bank Negara Malaysia, and DOSM, along academic research and regulatory documents.
Now, let's move on to the results and discussion. To begin with, Retakaful is an Islamic risk-sharing mechanism designed to support takaful operators by providing financial stability and sustainability. Similar to takaful, Retakaful operates on the principle of tabarruk, where participants contribute to a mutual fund to protect one another in times of need. Moreover, Retakaful ensures strict Shariah compliance by eliminating prohibited elements such as riba, gharar, and maisir. As a result, it aligns with the ethical principles of Islamic finance while maintaining financial protection for takaful companies. Besides that, Retakaful offers several key benefits. Enhances financial stability by distributing risk effectively, prevents insolvency among takaful operators, especially during high claims period, expands underwriting capacity, allowing the industry to grow and develop further. In short, Retakaful plays a crucial role in strengthening the takaful ecosystem while ensuring compliance and long-term sustainability. However, despite its advantages, Retakaful faces several challenges that limit its full potential. First and foremost, the industry struggles with limited availability of Shariah-compliant reinsurance option. Because of this, many takaful operators are forced to rely on conventional reinsurance, which contradict with Islamic finance principle. In addition, high capital requirements making it difficult for new Retakaful operators to enter the market. As a consequence, the industry remains highly concentrated, limiting competition and innovation. Another pressing issue is the regulatory differences across jurisdiction. Due to this, operational challenges arise, making it difficult to standardize Retakaful practices globally. To overcome these challenges, several solutions can be implemented. The first one is increasing capital investment to strengthen Retakaful capacity and reduce dependency on conventional reinsurance. Second one is fostering international partnership to enhance risk-sharing networks and expand Retakaful coverage. The third one is developing standardized Shariah guidelines to ensure consistency in operation and compliance across different regions. In conclusion, addressing these challenges requires a collaborative effort among regulators, industry players, and investors to ensure a stronger and more sustainable Retakaful industry. As we come to the end of our presentation, let us summarize the key takeaways from our discussion on Retakaful capacity and its impact on Shariah-compliant risk management. To begin with, Retakaful plays a vital role in ensuring financial security and stability for takaful operators. However, its development is hindered by several key challenges. Among the major issues are limited market capacity, reliance on conventional reinsurance, capital investment shortages, regulatory challenges. Therefore, to strengthen the Retakaful industry, we propose the following solutions: increasing capital investment to enhance market capacity, fostering international partnerships to develop stronger risk-sharing network, standardizing Shariah guidelines to ensure consistency in regulatory frameworks. In conclusion, overcoming these challenges require collaborative effect between regulators, industry players, and investors. By doing so, we can ensure a sustainable growth of the Retakaful industry while upholding Shariah compliance in risk management.